I'm Corbett Wall with DV Auction, here with your feeder flash for Tuesday, January the 4th, brought to you in part by Performance Livestock Analytics. Manage your feedlot operation anywhere, anytime with Performance Beef. Action plan. And it come out fairly early on Monday morning that we were going to be getting a kind of a virtual meeting that included President Biden and some people from the USDA, and that they were going to be visiting two people in the animal agriculture, and in primarily to cattle people, but also to pork and to poultry people too. But it was an action plan for fairer, more competition, more resilient meat and poultry supply chains, and it was pretty interesting. And so you think, well, what all come of this? Well, I've been telling you guys, and you guys have been seeing it too, that this Magoo administration, which I shouldn't say that because he's trying to get some things done here, but I can't help it, and I can't pretend that I have a whole lot of faith in the man himself. But for some reason or another, the administration is wanting to look into this lack of competition in your animal agriculture. The main reason that I believe that they're into it and getting and talking about and bringing it up is because they're wanting to use animal agriculture and our meat products as a scapegoat to blame a lot of this inflation on. And if you look at normal folks' bills, their food bill is gone up tremendously since this administration has come into office, and a huge percentage of that is due to your meat and poultry prices. And so they are going to draw more attention to that. And blame the Packers, which, you know, they sure deserve all the blame that somebody can place against them, that the way that they've gouged during this pandemic, and then use the problems that they've had keeping their workforce out on the front lines as a way to increase prices significantly. And they have had all-time record high profits since the pandemic. And so, you know, this administration is going to call them out on that. Now, I'm going to tell you straight up, and I watched a good portion of it there, and I'm going to tell you a little bit more information about it. But I'm going to tell you straight up the way I saw it. President Biden did as he normally does. He bumbled and stumbled, and, you know, it reminded me when I was a little kid and we used to visit one of my great-grandparents in the nursing home, and they kind of whisper because they don't really have any voice tone to them at all, and they're very unsure of everything that they say, and the blank look on their face and their kind of lost eyes don't give you that really feel-good feeling that they mean what they say or that you can stand behind it. But it was on the teleprompter, and watching him read that teleprompter was just about like trying to watch an old person read a newspaper using the bookmark and a magnifying glass and reading out loud to themselves. That's kind of the way it went. But the words sounded good. It's a four-part action plan. It's going to be invest, strengthen, increase transparency, and enforce. And this is not just for cattle and beef, but also for hogs and poultry, and for chicken, and hogs and pork and chicken and poultry, but significantly for the beef. But if you look at the invest portion of it, they are going to throw a ton of money at this issue. A lot of that American Rescue Plan money that they got during the pandemic stuff, which they don't know how to spend all that anyway, so they're going to spend a bunch of it here. They're going to have $1 billion. Now you guys remember what $1 billion is 1,000 million. That's a shitload of money. $1 billion they are going to throw at this. And how are they going to throw this money? They're going to be offering grants. They're going to be offering loans. They're going to be offering technical assistance. They are going to use it to offset overtime for inspection for some of these smaller plants and things like that. A bunch of money. And they're going to have another $1 billion for guaranteed loans for some of these smaller meat packing processors. Well, that's great. We need as many of them as we can find. We found that out when we were in the worst of the pandemic, when our shelves went bare and things like that. And the more of those we build, even if they're just only killing 10 or 15 or 50 or 100 a day, it's taking a little bit of the supply away. So it's going to help. And then, we've got all these new plants that are trying to come online. I assume most all of those will qualify for some of this money and some of this assistance, and it might help them compete with the big four packers whenever it comes time, because they are going to fight them tooth and nail, and it's probably going to be tough for the big four and the new plants that are coming on to be profitable for a while, because they are really, really going to fight them off, and they'll use every trick in the book that they know, including and especially manipulation on the beef buying end of it, with those end users and more of your wholesalers and retailers and different outfits that buy that product. They are going to be using every kind of strong arm tactic they can to keep them from purchasing product from some of these startups and these new plants that are coming on. But some of this assistance and some of this help may make them weather part of that storm. But for the most part, a lot of this money is going to be offered there in grants and things like that. And there's a lot of outfits that have figured out a way to get some of this grant money, and they're really not doing a hell of a lot to help anybody, but they're cashing in big time on some of this grant money. And, that's just the way it goes. Whenever you got government programs, you're going to have people abuse them. Okay, so investment was one of the four. Strengthening things is another. What are they going to be strengthening? It's going to be strengthening the rules that protect farmers and ranchers and consumers. Now, they're talking mostly about making your P&S Act a little bit tougher. Well, you can put all the rules in that you want, but if you don't enforce those rules and you don't have anybody to enforce them, and the agencies that you have don't understand what the hell's going on out there to enforce those rules, and they basically send a lot of letters out to order buyers that have bonds telling them that they need to raise them or lower them a few $1,000s every year to stay right on track. That's not really doing anything to help. Okay, we need them to go after outfits that are breaking some of our players, and we need them to go after these anti-competition deals that are out there, these antitrust laws and things like that. Now, if they will go after that, that's great, but making more rules and then not enforcing them is not too much. But they did say in there that USDA is going to be issuing a new product of USA standard, and it's going to be more stringent. So that could be everything that some of our people have been wanting, is get this product of the USA, at least where everything that carries that on the tag, on the label, was born, raised, fed, slaughtered, processed, sold, everything in the USA, and hopefully we'll get that done. And this is fantastic if we can get that done. We're going to increase the transparency. Well, we kind of already had that law passed through that formula library bill there that NCBA got behind all of a sudden because the administration had got behind it, and man, they pushed that thing through right along there with the new issuance of mandatory price reporting, which just went right through pretty fast. Okay, enforcement is another one, and they're going to promote the enhancement of existing competition laws and antitrust laws, perhaps, maybe, who knows. But So what's the reaction of everybody? Well, U.S. Cattlemen's Association, they commended the administration for doing this. Of course, they were actively involved with a bunch of the staffers in your legislature, trying to get these things brought up. They were very active in getting people to testify in some of these ag committee hearings and things like that. So they were all about it. RCAF is very skeptical, because they don't see, where their angle is going to fit in here and who they can sue. So we're not seeing that, even though Product of USA issuance in the strengthening part of it is exactly what they've been wanting forever. Here it looks like they've got it. It's not going to be MCOOL. I told you guys you'll never get MCOOL again, but you can get this, truth in labeling Product of the USA issuance done. That's as good as it's going to get. Take it or leave it. Of course, NCBA didn't say anything about it. It would not surprise me at all, though, to now see NCBA come in and push your Compromise Act, the 5014 and the Deb Fischer Cattle Market Transparency Compromise that they come together on, even though it's not perfect and we know it's not a silver bullet, but it does include minimum mandates for negotiated cash trade, which I've been telling you guys we have to get some level. And I don't care if it's not as much as we wanted when we started out. It's not going to be 50, it's not going to be 30 per se, but it's going to probably make it within the 5-area feeding region close to 30 because we're going to hold the north up to what they've been at, the Iowa around 50, and it's going to bring your southern plains, especially Texas, up to something that's fairly respectable. But I would not be surprised at all to see NCBA come in there. Okay, they've already hit all the triggers on their 75% of a robust market deal. So if they do what they say they were going to do, which we would expect them to do that, they are going to have to aggressively go after some legislative or regulatory action that asks for more trade, negotiated trade. And so I assume that they will come in there. They're going to visit about this in early February when everybody goes to Houston as we get back on the regular schedule for the NCBA convention. And I assume that they will probably get behind this because they know that it's coming anyway. And since they know that it's coming, they might as well get in behind it and then show that whatever they get behind gets pushed. So, one thing that was in that video that included that virtual visit there with President Biden, it talked about his executive order that he did back in July talking about competition, and he also endorsed that Compromise Act, the compromise between the 5014 and the Cattle Market Transparency Act. He endorsed that. So now, ag committee leaders, like Deb Stabenow and them, they're going to go ahead and put that together and put it up for debate and for a vote. And all of your Democrats are going to vote for it because their leader, as weak as he might seem, has said that he's behind it. Well, he was reading what was on the teleprompter, and the powers that be, whoever you think those guys are and gals, they are for this. So this is going to get done, guys. You didn't think it was going to get done. I guarantee you. I know some of these organizations had it on their books. They had it as part of their policy. But I'm telling you, this all started about 2 years ago, 3 years ago, whatever it was, in Jake's Steakhouse at a U.S. Cattlemen's Association event. Whenever a bunch of us sat down at the table and tried to decide what we could do to try to save this industry. And I want to commend Jess Peterson with U.S. Cattlemen's Association. I want to commend Justin Tupper. I want to commend everybody that was there and was playing a part in all this. And I think it's going to get done. I really do. And it's going to set some level for minimum negotiated cash trade. And hopefully we can keep it pure cash, but they're probably going to sneak the grids in on us. But if we establish minimum levels and keep it where it's adjustable, it's got to be way better than what we've had, and it's the best we're going to get, and it's all we're ever going to get. Let's talk about your board to open the week. February live cattle futures down 77 cents at 138.92. April was down 62 cents at 144.20. Go on your back months, your live cattle ever down 12 to down 45. January feeder cattle down 62 cents at 166.25. March down 42 cents at 169.52. Back months on feeder cattle down 27 to down 57. Everything pretty much lower, but not horrible. Your corn and wheat futures were slightly lower. Beans 15 to 16 cents higher a bushel. Your weighted average on last week's pure negotiated cash trade in your 5-area feeding region, 71,800 head. A lot more than what I told you on the last visit, because I told you they had just started buying cattle in the Southern Plains at 138 when that report came out, and so they didn't have very many of them in there. Well, you know, the cattle in the Southern Plains are just like dominoes. When one starts falling, they all fall, and so they sold a lot more cattle down the Southern Plains, mostly at 138 there, but 71,800 compared to 31,300 the Christmas week before, and then 72,400 the same week a year ago. Live sales steers and heifers in your 5-area feeding region, 135 to 142. That's just steady to $2 higher, but it was a lot higher than that on your weighted average, because we got all of that Northern Plains and Midwestern trade up there in the high 130s and the low 140s. So your weighted average on live steers in your 5-area feeding region, 139.59, up nearly $4, up $3.95 compared to Christmas week's weighted average. Dress sales were 218 to 226. Now that was 3 to as much as $8 higher on your spread there, but it was all on that top side, and there wasn't hardly any 226. It was mostly 218 to 221, 222. Your weighted average on dress steers 5-area feeding region was 220.89. That was up $3.59 compared to the weighted average during Christmas week. Nationwide negotiated sales, 93,100 head. About 29% of those, or about 27,000 head, were for the 2 to 4 week delivery. Your packers would like to start getting back into that 30 percentile on buying cattle for 2 to 4 weeks out, because that really helps them set up the market where they don't have to keep giving more money every week. But on the 93,100, that was negotiated. About 31,000 were turned in negotiated grid. I'm not sure how much negotiation went on there. Formula sales last week, 232,600 head. Box beef cutout values higher, and they're going to start slowly creeping up again. 266.03 on choice cuts, as up 77 cents. Selects up 67 at 258.90. Talk about what else is going on. Beaver County Stockyards in Beaver, Oklahoma Panhandle on the eastern end there, and they are fairly new DV auction customers. They've got a barn that's been there for a long time, but they have spent a lot of money there in the last 3 to 5 years, and they have got new pens, they've got new facilities, they've got a heck of a good market there, and I urge you people to send cattle to them. They don't want any trader cattle, so don't do that. They're not going to help you much there. But if you're sending fresh cattle in there, they got an excellent yearling market. They're right in the feedlot center, in between the Texas feedlots and the Kansas feedlots there. And they've got some of the best buyers and the best market in the Southern Plains there. They have got a big sale here today on Tuesday. You can view and bid it on dvauction.com. If you want to be approved to bid, now you need to call into Beaver County Stockyards office and establish a little bit of credit with them before the sale starts. So be sure and do that. But they've got over 5,000 head of cattle here today on Tuesday, with 50 loads of true yearling cattle, and they'll all be fairly local there. and some of them coming back in off the dry wheat pastures. They were planning on keeping them out there, but don't have anything for them to eat. You can imagine what the condition's going to be on those cattle. But Beaver County Stockyards, check it out. How about your feeder cattle market, your real-time index on DV auction late on Monday at 162.21. That was down $3.84, and you think, what? Well, we had a few of those special sales that happened, and especially that one in Mitchell, South Dakota, that happened over New Year's week. That was about all that was in there, because we didn't have any sales early New Year's week, and we didn't have any sales late Christmas week. So we got some Southern Plains high volume sales in there. We're going to build those numbers back up in your 7-day moving average, but it's getting back in there kind of where it needs to be. But 162.21 based on an 800-pound steer. Oklahoma National Stockyards in Oklahoma City on Monday at about 9,000 head, compared to 3 weeks ago, before all the holidays. If you can go all the way back then, feeders were steady to $3 lower. Steer calves $3 to $6 higher. Not sure where they're going to put those. Heifer calves steady to $4 higher. But big time stick out sale and Oklahoma National Stockyards there on some big feeding steers there. 240 head. They called them fancy. I don't know if they're going to give them a blue ribbon, or if that helps them make their break even, or if they're going to feed for around $1 instead of $1.30. But 240 head of them weigh 826 pounds at $170 smooth in Oklahoma City. Not in Burwell or Bassett, but in Oklahoma City, $170 8 1/4 weight steers there. That's $13 over what the average was on the light 8s there in Oklahoma City, and way higher than what our index levels are at. But big time stick out sale, Oklahoma National Stockyards. How about Joplin Regional Stockyards? They had a bigger sale, 11,300 head. Now they did have a sale 2 weeks ago, so instead of 3 weeks compared to 2 weeks ago, steers sold $3 to $6 higher, with spots as much as $12 higher, especially on your 5-weight steer calves. Heifers sold $2 to $5 higher. Really good market there. Look at this automated market report out of Cattle Market Central through DV Auction there. You can see your best tested weights where the big runs were at. We're going to look at the steers. 993 head of 5-weight steer calves, average 561. With a weighted average price of $176.97. That's pretty salty on heavy 5-weights there in the southwest Missouri. How about 1,316 head of 6-weight steer calves, average 649 in Joplin, 163.63 on your weighted average price. 1,871 head of your 7-weight steers in Joplin, average 754 with a weighted average price of 158.12. And look at all these 8-weight steers. We thought all the yearlings were gone. 2,434 head of 8-weight steers, and they're mostly light 8s, averaged 836 with a weighted average price on those steers, Joplin Regional Stockyards, of 157.33. How about a couple other stick out sales on Monday? Aberdeen livestock sales. Aberdeen, South Dakota, sold 57 head of 1,020-pound steers at $160.85. But the best quote that I saw anywhere on Monday, your National Beef Wire top quote of the day, come out of Faith Livestock Auction, Faith, South Dakota, 95 head, 505-pound steer calves, bring $218.50. That's your feeder flash for Tuesday.